What's going on, guys, and welcome back to another video. So today I want to focus on two main topics. Firstly, we'll have a brief look over my trading 2 and 2 portfolio to see how it's performing, and second of all, I was asked a question a few days back of what my plan is in terms of dollar cost averaging for stocks that are up about 70 or 80% at the moment in my portfolio. So I'm going to discuss my plan of action going forward, especially in a bull market, because my main premise of investing was the dollar cost average into stocks that were in the red. So that may change now going forward, and we'll discuss my plan of action. So what a strange few weeks it's been in terms of the market, with a lot of highs and lows. I made a video last week, or it was even the start of this week, comparing how my best and worst stocks were performing, and at the bottom of the list at the time were two companies, Tesla and iShares Global Clean Energy ETF. Both were down between 22 and 15%. And it's crazy to think that even after that day alone, Tesla jumped back up to 15 or 16% straight away. And other companies or ETFs such as iShares also done so. We can see on screen here that we currently have €7,966 invested. While ago this went over the 8,000 mark, which brought us up to 8% of the way towards our €100,000 goal of investing into the market. We can also see we're up at the moment 13.5%, or €948. In communication services, we currently have two holdings that are up over 28%. We have €611 invested, and we can see down below here, Walt Disney and Facebook make up the two holdings within this sector in my portfolio. Walt Disney is up an impressive 53%, and Facebook is currently up just over the 7% mark. In consumer discretionary, we have three holdings, and it has now gone back into the green. Last week we were down about 5% within this sector alone, and we're now up about 0.6% and have €1,164 invested. The reason this has gone back into the green is that Tesla, and due to dollar cost averaging and also the stock coming back up in value, it was down, as I said earlier, about 22% earlier this week, which is crazy to think such a company like Tesla has jumped or dropped so much over the last few days. Thankfully, it's starting to come back again, and it's now only down 3.7%, so definitely looking a lot healthier now. We then have McDonald's, which is up pretty much break even, or 1%, and then Nike is up 5.5% at the moment. Another sector that we've reached over the 1,000 mark is consumer staples. We can see on screen here that we currently have €1,300 invested and are currently up about 1.5%. We have three holdings here in the form of Coca-Cola, which is up 5%, PepsiCo is up 1%, and P&G is currently down 2.4%. We then have my energy sector pie. We have €470 invested and are up 23%. We have three holdings here overall. iShares Global Clean Energy ETF, which we've made many videos on over the last few weeks, is now down about 5%, which, as bad as it sounds or as weird as it sounds, that's actually quite good in comparison to where it was a few days ago. It's back up about 11 or 12% over the last few days, so I'm very happy with that. And I'm also very happy that I got in at a lot cheaper price as well to improve my dollar cost average. And we then have the two old school style energy sector companies that are doing very well at the moment, in the form of ExxonMobil, which is up 78%, and Chevron is currently up 52%. Now, as well at the start of this video, I said I wanted to discuss what my plans are going forward with some of these stocks that are up so much, so we're going to discuss that later on in the video as well. My two main overall ETFs are doing quite well as well, up about 17.5% at the moment between them, and we have €766 invested. Global or Vanguard S&P 500 is currently up 17.9%, and the FTSE 100, which tracks the top 100 companies in the UK, is currently up 15%. So I'm quite happy with how the overall two ETFs across the globe are currently doing. Another sector I'm very happy with the performance at the moment is the financial sector, which is up 35%, and we have €1,164 currently invested. We can see on screen here that all five companies are doing very well. Visa is up 14%. We then have MasterCard up 18.5%. JP Morgan and Chase is currently up 57 or 58%. Bank of America is up 52%, and Goldman Sachs is currently up 71%. So overall, this financial sector companies are doing extremely well at the moment. In the healthcare, we have over 800 invested and are up over 8% as well. Three holdings here at the minute. Johnson & Johnson is currently up 8.8%. Now, I thought this company would be doing better. Again, 8.8% is still good. However, due to their proposal of the one jab vaccine for COVID, I would have expected a share price to kind of jump up a bit more. However, I'm still quite happy with 8.8%. We then have the likes of AbbVie, which is up 24.7%, and Pfizer is currently the one in the red, down 2.3%. The industrial sector pie is one of my smaller holdings. We only have about €262 invested and are up 13%. We have 3 holdings here at the minute. 3M is up 12%, Caterpillar is up over 40%, so I'm very happy with that one, and Waste Management is currently up 7%. Now that can kind of be one of the problems with dollar cost averaging as well, because when I invested into 3 of these companies, they straight away kind of shot up in value. Now again, there's nothing at all wrong with that, but in terms of dollar cost averaging down to get a better average cost, I never really got the opportunity to do so. So that's the reason why there's only 200 and odd euro invested at the moment here. So again, we discuss my dollar cost averaging going forward, or later on in the video, and my plans going forward as well, because a lot of my companies are way above the parity or in the red. So because they're all doing quite well, and again, I just want to stress the fact that I'm delighted they are doing well, but we kind of have to adjust our matters or adjust our investing strategy going forward. In terms of materials, we currently don't have any investments at the moment within the sector, so I am looking for 1 or 2 investments within the material sector. So if you have any companies or stocks that you would suggest, I'll be sure to look into them if you want to drop a comment below. In my penny stock pie, we only have the one company at the moment in the form of High Tide. Now there's only about €27 or so here at the moment, but that €27 bought us over 50 shares, and we have dollar cost averaged in about 3 times at the moment. Again, tiny amounts of money here I'm putting in, maybe €5 or €10 at a time. So I am kind of looking to keep this penny stock long term. Well, in long term I mean months, maybe up to a year. It's not like your standard penny stock where you buy in and get out as quick as you can, because they're quite volatile. But companies such as High Tide, I do believe going forward they have a lot of promise. So that's why I want to slowly drip feed funds in. Again, I know it's only €27, but down the line I hopefully have a lot more substantial investment within this company. We're currently up about 0.4% at the moment. We then have my one real estate stock in the form of Realty Income. Now I really like this stock because it does pay a monthly dividend, which is quite unusual in terms of your standard stocks. We're currently up about 5% within this holding, and again, just like I said earlier in my industrial pie, I didn't really get the chance to dollar cost average in here for a long time, but hopefully, again, if it does go down in value, which is strange that sounds, if it does, I don't mind at all, because I will be buying more to get a better dollar cost average to improve my profit in the long term. Then have my largest sector allocation at the moment in the form of my technology pie. We currently have €1,300 invested and are up over 15%. All 5 companies here at the moment are doing quite well despite the recent tech kind of consolidation. Microsoft is up 14%. Amazon is currently up about 0.9%. We then have the likes of Apple up 9.5%, Alphabet up 43%, and then IBM is currently up 7%. So I'm quite happy with how these tech stocks are doing at the moment, especially due to the consolidation or a bit of a sell-off over the last few weeks. So I was posed a question a few times, so I thought I'd address it as well in terms of dollar cost averaging. Now I was asked what my plan is going forward if some of my stocks or a lot of my stocks are up well above in the green. For example, my energy sector companies, Chevron and ExxonMobil, are up between 50 and 75% between them. So again, I'll probably be ages or a very long time until I get an opportunity to dollar cost average if they went into the red again. So that kind of poses a question of what my plan is going forward if my portfolio does continue to go up in value, which is kind of more likely as a long-term investor. So I have kind of 2 plan of actions or 2 thought processes to go into this. The first of these is to firstly leave it as is and kind of get a second portfolio going. So as such, invest in more companies. So maybe put these 30 companies into one portfolio and start a brand new 30 stock portfolio as well. Again, across all different sectors like I'm doing now, but different companies. And then kind of dollar cost average into that stock or that ETF portfolio as well. And then if it comes to a situation where any of the 30 original stocks go into the red, I could dollar cost average there as well. And the second option I'm thinking of as well is, let's say, cutting or taking out my profits from those bigger companies once they go over a certain percentage. For example, let's say the 50% mark, any stock that goes over 50%, sell off over the 50% mark. So let's say Chevron is up 70% at the moment. Well, sell 20% of the profit there to bring it back down to the 50 and use that extra profit that we've earned and pump it into the worst performing stocks. And again, the stocks that are kind of down the most, to help improve the dollar cost average, as the bottom line is to get the biggest number we can possibly get in the top left hand corner here. Now again, those are just kind of two thought processes that pop to mind. I'm going to obviously do a lot more research and due diligence into this before I make any decisions. So probably over the weekend, once the markets are closed and I have a bit of time off work, that I actually will sit down and kind of go through my plan of action going forward, and I'll update you all at the start of next week my plan of action going forward. So that's pretty much it for today's video. I just wanted to give an overview of how my portfolio is doing at the moment, and we also had a look through my plan of action going forward in terms of dollar cost averaging and what I'm going to do or what way I'm going to approach companies that are up so much in value. If you found any benefit in today's video or found it any way interesting, it'd be brilliant, as always, if you're new around here, if you consider subscribing to the channel, and if you could smash that like button as well, it'd be really appreciated. And most importantly, as always as well, if you have any questions, comments, queries or suggestions, please don't hesitate to comment below, and I'll be sure to get back to you as quick as I can. Thanks very much, enjoy the rest of your day, and I will see you all in tomorrow's video.